Hello, Namaskar, good evening, friends. A very warm welcome to you all on behalf of Elan Markets. I'm Shanundu Dash. I'll be your host. Who I am? I'm the Forex and Commodity Mentor associated with Elan Markets. I have more than a decade experience handling the global markets, FX, and commodity assets across the aisle. And today with me, I'm extremely honored to have Abhijit sir with us. Abhijit sir is also associated with multi-asset trading mentorship program, have well more than a decade of reach experience. So we'll be hearing his thought as well. Welcome, Abhijit sir.
Good evening, Janando, and good evening, everyone.
So as I handle the forex and commodity part, and Abhijit sir will be handling as these are the items you can see included. Abhijit sir is associated with short-term momentum trading. You can also follow me. This is my Twitter handle. Just a moment. Let me. This is the Twitter handle. If you wish, you can follow me over there as well. So, what this live is about, what's happening through the global markets, and as well as what opportunities lies in the Indian markets. We'll be discussing that. So, in the first 15 minutes, with Abhijit sir's due permission, I will take you through the global markets, take you through if any opportunities are coming up in the currency and commodity space. Then I will pitch in show Abhijit sir in, and I'll be very much interested to hear his ideas about Indian equities, Indian stock market, as well as any other things he would love to share. So we'll start where we usually start is the U.S. bond market. This is the US 2 year interest rate. What we are looking at a daily chart right now. So broadly today is a doji, which you can see a mixed day. Friday we had a comeback. Monday we had a continuation in the interest rate. So overall we can see today is in the bond market, at least in the US market, everything is broadly calmed down compared to previous moves in the past week or even yesterday. So it's pretty calm today. So what we can expect in the currency market is dollar will not be in favor as yields are not supporting. We can see US dollar clearly remains out of favor. Both of my charts, which is active candlestick chart as well as which is more passive, both are indicating that dollar is currently a bit weak. And if this hammer is getting challenged by the bears, that means further potential lies for downside in the USD. And downside in the US dollar is broadly positive for gold and silver. Let's have a quick look at what's gold and silver doing. Silver and gold broadly flat today, as we can see. If we look at short term charts, let's have a quick look at the short term charts. In 30 minutes chart, we can see gold is trying to make a comeback, which is natural. As we discussed, dollar is significantly moving lower. So further upside remains in gold in the short term as long as the dollar remains weak. Whereas the yield is not moving, interest rate is broadly not moving. That means it's adding pressure to the gold. Whereas it is, at least we can say, it's getting support from the US dollar, but it is not getting support from the interest rate that it requires. We also talked about in previous session the natural gas. Lot of new opportunities are coming from retail side of the game as new mini contracts have been introduced. Only 500 MMBTU is now the contract size compared. Sorry, 250. Yeah, 250 is. I'm sorry, 250 is the size. Previously, it's 1,250, which was a very large contract. So even retail side of the players can take opportunities in these commodity markets. It's clearly a bearish structure for natural gas, once again trying to move lower. So what I'll prefer to play bearish strategies in natural gas, which is mostly in my case futures. I'd highly recommend that you deploy any kind of hedge strategies or do your own risk analysis before assuming risk in this market. Let's have a quick look at crude oil. Crude oil gave a fantastic rally and yesterday, and we had a beautiful fall on Friday as well as a comeback. So, what's happening in crude oil? Basically, crude oil. Just a moment. Let me change it to crude oil. Crude oil, we had a quite a good bullish run, as you can see from both the candlestick chart as well as more muted chart. It's quite clear that crude is currently back to its consolidation in the short term. After a good rise, it has come back. In the candlestick chart, which is more sensitive to price action, as we can see, it has formed not a beautiful hammer, but hammer sort of a candle at around key support. So definitely no. Here we should not jump to short crude immediately. Trend has been buy. It is well above the moving averages, whereas these candle as well as these formations are warning against jumping to buy. So where we can trade once crude oil starts moving off 6040, we can go for a long position. And definitely with the appearance of this hammer, this is very helpful for us. With this hammer, if the hammer is taken out to the downside, we can aim for a short opportunity targeting the dynamic support coming from rising this long term trend line. I think broadly, no other major opportunities are coming in commodity space. One opportunity came, but it has broadly soured. Let's have a quick look at that. Copper tried to make a break. In this chart, copper attempted to break with this candle. Similarly, in 30 minutes chart, copper tried to break with a candle, but the break looks like has failed for now. So there is no trade coming in the copper as well, with the long-term stabilizing long-term trend line, whereas the short-term trend lines are clearly moving lower. So we can expect a short-term consolidation in copper. So once commodity is done, let's have a quick look if any opportunities are coming in the currency market. Currency market also provides great opportunity for retail traders as contract size is relatively small. Those who are looking to try out their opportunities in other markets other than Nifty, definitely they can have a look at the currency market. 30 minutes chart is broadly positive, at least this chart is definitely positive. Let's have a quick look at the bit swing chart, which is I'm looking at the 2 hour chart. Euro INR, we discussed on this in previous. Euro INR looks quite bullish. We discussed if since INR is going to be relatively stable thanks to Reserve Bank of India and INR fundamental. So if dollar is weakening, that means euro pound will get a push. So that's a definite positive news for euro INR long. So euro INR long looks quite a bullish, quite positive trade at this point. Problem: our currency market closes at 5 p.m. So we cannot even if this breakout looks pretty well and it sustains. You cannot participate in this one. Currency market is open from 9 to 5. So whatever opportunity or decision that is coming from, we have to take before our market close once we plan to take an overnight position. Euro INR, so it's quite bullish in the 2 hour limit frame. In swing of position, I'll look for buy opportunities in GBP INR when markets opens next day. GBP is definitely after a steady rise, it is back to a struggling. So I'll not be jumping to GBP INR, rather Euro INR looks strong. And from global positioning, we have discussed this in our last session that the big players have been buying into a euro, while euro has been weakening in this phase. Just a moment, I'm back to the euro. Euro has been weakening in this phase. The big players have been buying the weakness. So that is another potential reason to go long on the euro side. USDINR has been strong in the short term, quite strong USDINR. But if we look at a bit longer term charts, let's make it a daily chart, and USD INR is broadly moving in a consolidation. Every time it is attempting to break higher, whether on US dollar strength or rising interest rate, it has been halted by the Reserve Bank of India, whereas the fundamental still remains bearish for INR. So it remains completely in a consolidating phase, whereas if we draw a trend line, if we draw a trend line, several interesting trend lines are coming up. So those who are for big opportunities, we would love to have a break of this consolidation in USD INR. So I'm not very active in USD INR as other pairs are providing much better opportunities. JPY INR is another counter where there was a good short side opportunity as risk sentiment improved, yield stopped going lower overall. So that forced a downside in overall. Just a moment, this was the USD INR chart. So it broadly forced a downside in JPY INR. But now what we are seeing a comeback in JPY INR, and this is largely due to the weakness in US dollar. INR is stable, yen is weakening against the US dollar. So we are witnessing a small up move in JPY INR. My last counter will have lastly look at the global equity markets, what the global equity markets are suggesting to us. This is the S&P 500. S&P 500, I'm looking at the daily chart, still not very bullish structure, but one interesting structural change that has been taking place. Let me just highlight. This is broadly one positive news amid all this crisis news, Silicon Valley Bank, that overall structure of the S&P in daily chart not very extremely bearish. In fact, it is quite bullish, and if we look at a bit more longer term chart like weekly, it would feel more like it is consolidating. And Nasdaq has been, which is the US tech index, has been extremely positive compared to other indices. But this did not, I don't think it largely benefited our markets or our IT stocks to be specific. But we'll learn more on that from Vijit sir. So that's all from my side on the global markets. I would love to hear from Abhijit sir and his ideas. What I would like to ask sir is, this is, if we sir, if we look at the Nifty structure, it is quite bearish, and many of the retail traders are largely not short side players. It is a mentality that we will continue to buy. We are on a buy mentality on Indian side. So how do they cope up during this bear phase? How should they approach the market in this bear phase? Thank you, sir. Over to you.
Thank you, Shanando. And it was good listening to you about the commodities and the currency markets. Before I share my charts, well, I've been in the market since 2002, very actively from 2005, and I've seen that the Indian retail
Sir, you're
participants.
not audible. Is I cannot hear the voice.
Yeah, am I not audible? Others, can you hear me?
Just let me check from my side once. Yeah, it is fine from my side. Can you please check, sir?
Yes, Shanando, am I audible? Can you hear me?
No, at least still not audible. At least I cannot hear it.
Others can hear me? If other participants, if you can hear me, can you just put it in the chat box? Yes, Siddhartha is saying that he can hear us. Others, can you quickly? Few more participants, if you can quickly. Siddhartha, I've got your reply. Others who have joined in, yes, I think Shanando, there is some issue probably at your end. Maybe the output, audio output. Okay, so I hope this is getting recorded and you can check with it. So what I was saying was, keeping in Shanando's question about the Indian retail market participation, I have personally seen how well matured they've become. Post 2008, and especially after March 2009, the invent of the discount broking technology coming in the forefront. And so I think in today's time, Indian retail participants do think of shorting the market. This is a limitation of their capital. If the capital is too low, then it will restrict them to participate in the FNO segment. But having said that, they do understand what is shorting. They might not come very naturally to short the market, but they are maturing. Having said this, let me quickly share my screen and take you through few of the charts that I was working on today. So here you go. So this is my chart. I'll quickly check. Is my chart visible? Can I have one or two yeses from the audience? As Shanando can't hear me, so I'll just consider
Yeah,
your
it's
answer.
visible. It's quite visible, sir. I think your chart is visible.
Thank you. Okay, so let me quickly walk you through. First, let's talk about the Nifty, of course. So if I come to Nifty, and I have, you would know, those who have been following my work, you know that I generally take a look at three different time frames: the weekly, the daily, and the 75-minute time frame. And because it takes a little bit of space, I will just zoom out the daily time frame first. Now, this is the Nifty daily time frame. I'm using short-term trend momentum indicators alongside Heikel Nashi. Number one, from the weekly charts, the Nifty sell-off, this particular correction, if we consider an info line from an high to low, then we are looking at a current correction of around 11.1% in 16 weeks. It's not bad. And at the current close, the index is back to its September 22 lows. Previous lows are not certain to act as supports, but considering the fall has not been like one way down, it has taken its time, down, up, down, a little bit of bounce. So it's taken its time to come down. And because it has taken its time, it has got a little bit of matured in terms of time, 16 weeks. It has got a little bit of matured in terms of short term momentum indicators going deeply oversold. So, keeping these few pointers in mind, we can expect, it's not wrong for us to expect that this particular low, which aligns with previous high of the Nifty on the weekly time frame, we can expect a little bit of slowdown in the selling, not a reversal. It's too early to call a reversal. We've come down. The directional move has been for the last 3 weeks, and this week is just 2 days. It's more of a spinning top doji kind of a price action. We will keep this thing in mind that Thursday is a market holiday, so it's a truncated week. We have 2 more days to go. So far, जो यहाँ दिखता है अपने को, we can say that the index is consolidating the recent directional fall. This consolidating the recent directional fall from the weekly chart, if we come down to the daily time frame, then this will be much more clearer by looking at this range bound activity. Now, if you are heavily into patterns and you look for patterns all the time, then not a very clean one, but maybe we may end up getting ourselves into a falling wedge in a falling market, which can act as a reversal. So let's bring to a conclusion our analysis about the Nifty. Trend is down. The underlying momentum with which it sold from this point to this point is now slowing down. So momentum is slowing down. That does not necessarily mean that selling is over. We need to wait for what we call as confirmations, and confirmation can only come from price. So whatever little we can see on our charts right now based on today's close, we can clearly say that the trend is down, the selling momentum is just slowing down, but we do not have a confirmation of a reversal. Neither do we have a confirmation of a follow-through sell-off. Follow-through sell-off means the recent lows gets broken. Confirmation on the upside means some kind of a bounce back, some basic bounce back. Now, what I can see, if you come very closely and zoom within the last 3 days price action, this particular, then I can see that today and yesterday's price action was primarily, majorly within Friday's range. Not exact. I'm looking at Nifty future. So not exact to the decimal point, but yes, essentially we are looking at Friday's range breakout. So if I'm expecting a move up, then the market needs to go above this and preferably close above. On the other hand, the breakdown will be down here. Now, those who like to read upon the candlesticks, Japanese candlesticks, this looks like an last engulfing. This is a bearish engulfing pattern wherein a red bodied candlestick engulfs a green bodied candlestick. And this kind of a pattern generally should take shape at the end of an uptrend. But we are not in an uptrend, we are in a downtrend. And that's why it's called a last engulfing. It's like the last nail on the coffin, the last bout of selling, after which the price reverses. So, is it actually going to work as last engulfing? I don't know. How will I get to know? I have to wait for confirmation, which means what? The index needs to go above today's high and preferably close above today's high. So, if we put down all the pointers that we discussed right now, one, trend is down. Two, it is consolidating. Selling momentum is slowing down. A little bit of a short term bullish Japanese candlestick pattern shaping up. These levels from the weekly chart comes from September 22 lows. So keeping all these pointers in mind, maybe, who knows, maybe we can expect the index to give us a short term bounce back. I personally will not fall for the breakdown. What do I mean by fall for the breakdown? Means if the breakdown comes, I would not want to participate in this. I might get trapped. On the other hand, it's not a bad idea to work for the bounce back towards 17,400. Now, last week when I did a couple of YouTube lives with Suchi, we were discussing about how this index got trapped and this movement, and I was expecting this to take me in this area. I'm expecting a retest of this. It's just that this attempt failed. Whether it will come in this attempt or not, that needs to be seen. So index is range bound and choppy. That's the difficult part. If you're an intraday trader, you would have definitely faced it. And we should wait for this Friday's range to give us some kind of a breakout. Now, if we now move on to a few of the sectoral indices, if you come to Bank Nifty, now Bank Nifty definitely very, very similar behavior, but Bank Nifty is a little far off from its previous lows. So Bank Nifty is showing a bit of relative strength. I have a hidden divergence staring at me right on my face over here. And today was extremely range bound. You don't expect such a sharp contraction of range, daily range from the Bank Nifty. Rare occasions. Last time you saw such an occasion was here, which led to a 2-day directional move. Now, today has also given a sharp range contraction. So it's not unfair to expect that in the next 1 or 2 days, we can expect a decent sized candle. The only question is this decent sized candle is going to be green in color or red in color. Now, considering the trend is down, trend followers would love to see a breakdown. Considering the short-term momentum is slowly picking up and momentum is a leading indication, short-term traders would like to look for a long upside breakout. Where do I stand? I stand my 60%. I'm standing towards the long side, expecting a upside breakout tomorrow within the next 2 days. It can break out on the downside also because the trend is anyways down because the overall market sentiment is not that great. But I'm more keen on the upside breakout. I do not wish to sound very bullish. This is not a bullish per se setup, but it's not bad either. It's like you're preempting a directional move. The caveat to this situation, and I had discussed this earlier, is this range. This is where classic conventional technical analysis is playing out. Your previous supports have been proven as resistance. Now, when this happens, the downtrends, which finds retest as resistance, generally open up on the downside. So the overall structure of the market is still weak. So with that in mind, if tomorrow I see any kind of a move beyond today's high, especially from few banking names, maybe SBI, or I'm looking at Kotak Bank for sure. Non-banking names, Reliance is something that we can keep an eye on. From a short-term point of view, let's see if we get this move. Or else if it doesn't come, or should I put it in this way? If the index has to go up from here, it should deliver immediately. That's, I think, tomorrow. If tomorrow we don't get that, we don't get a decent move breaking today's high tomorrow, then I don't think it will be able to sustain, because the overhang pressure is a little too much to handle. So index, bank Nifty especially, and the Nifty also, they have an opportunity to give us a move on the upside. It will be ideal for short-term traders to participate. If you participate, do not hold on to your long positions for too long. ज्यादा देर long खरीद के बैठे मत रहिए. This is not a setup जो मुझे यहाँ से यहाँ लेके आएगा या फिर यहाँ. It does not give me that clarity. It gives me that much clarity that I can expect a short-term 1 to 2 day bounce back. That's it. I don't want to predict the size of the move. Amongst the other sectors, I was doing some analysis. Auto and IT are completely broken down, and I think, closed at the lowest point of the day. This is CNX Auto on the daily chart. Nothing happening here. IT, I was expecting some kind of support from Infosys, TCS, didn't come. So these two sectors are completely broken down. Keep an eye on Bank Nifty and the banking names. Keep an eye on finance and few finance. We will take a look at few stocks. I'll just quickly go through the sectors. Pharma. If those who follow these YouTube lives, then I think in the last week's YouTube live when I interacted with Suchi, we were discussing about pharma and I spoke about Sun Pharma. And CNX Pharma, as you can see, has given us a short-term trend reversal. Nothing great, but not bad either. I say nothing great because it's in an emphatic strong downtrend. आप अगर इसका weekly chart देखेंगे, it's a clear downtrend. So it's giving us a short-term bounce back. Sun Pharma is the one you can keep in mind. It has already given us a move. So आगे जाके for the next 2 to 3 days, you can keep an eye on Apollo Hospital and Cipla. Both of them are very contrarian in nature. So act accordingly. Metals is weak, but metals weekly chart, which is down and out, beaten down, is creating one leg on the downside, which is kind of slanting with my short-term momentum indicators. Now, what these fancy things mean is it is weak, it is beaten down, it is coming down, but this is not the leg to sell. This is probably the leg where some contrarian traders can act upon. So weak, but not weak enough, or should I say, the momentum is not there to short. So maybe a contrarian setup, metals not ready. So agar market ऊपर जाता है next 2 days, then I think my hunch is few banking names and financial names and the top 15-20 names जहाँ पे आपका Reliance आता है. So with that, I'll quickly bring your attention to few banking names and let's try and understand which ones we can expect to give us a move. iBank, if you'll remember, we discussed from this area, it has given us a move. It's finding a bit of support in short-term EMAs. Maybe a retest of this, probably yes. Today's high is the trigger. ICICI Bank. IndusInd Bank played out pretty well, 2.3% kind of a move in today's trade. Not exactly a double bottom, but no, not IndusInd Bank. ICICI Bank seems fine. You have a bullish Harami pattern on the charts of SBI, after which it has stayed range bound. This is going to be a contra play. So it doesn't seem like SBI is going to lead, maybe a short-term move. Axis Bank, I'm very hopeful, but Axis Bank is not showing that kind of a structure. Then we are left with Kotak Bank. Now, this can be an interesting breakout candidate because it has given the first leg up. It has given the first corrective move. The first corrective move has more or less taken 50% of the previous up move. Now it is back to its previous high. So typical breakout trade happening above today's high or this high. So Kotak Bank, but Kotak Bank is there among the top 6. It's not the best weightage or the highest weightage. The highest weightage and the stock that matters to the Bank Nifty the most is HDFC Bank. Now this guy, like Kotak Bank, has given us one leg up, has given us a 50% correction as and also shown a bit of strength in today's trade. So keep an eye on Kotak Bank, keep an eye on HDFC Bank, and keep an eye on ICICI Bank from the banking perspective. Financial stocks like HDFC will also show similar kind of a setup. So if banking and finance supports the market, then these kind of names are the ones that I'm looking at. But having said this, Shanando, this is a market which is not easy for short-term traders. Not easy at all. It's choppy, it's range bound, the range is getting narrower, so it becomes really difficult. But so be it. Once the difficult times are behind us, I'm sure that we will get a trending move. If the trending move comes on the upside, the first leg will be fueled by shorts getting covered, so it will be sharp. So if you're short, if you're net short in the market, you need to be a little careful. Let's see what's in store.
Thank you, Abhijit sir. Such wonderful take up of Indian side of the market. We are very, very much pleased to have you all as our audience. Thank you very much for attending today's YouTube live, and we'll see you all again in our next live. Thank you so much. Thank you,
Thank you.
Abhijit sir.